What's happening in California real estate? If you're reading the headlines, you're seeing that the median home price is going down, buyer demand is down, but you're hearing a lot of YouTubers, the news saying that real estate prices are up, the housing market is still going crazy. So what's actually happening in California real estate? Can we continue to see the appreciation that we've seen over the last year, where San Diego has appreciated nearly 25%? And at the same time, Los Angeles County appreciating about 20% during that time? In today's video, we're going to dive into some of the data. We're going to talk about what's happening in California real estate at this time, what's driving housing prices, why are we seeing this craziness, and we're going to talk about affordability. Are we on the brink of affordability? Do home prices have to pull back because, of where they've gone? We're going to look at some data, nationwide data that shows that home prices might still have some room to grow, especially compared to other countries like Australia, Canada, France, and the UK. We're going to talk about what it looks like versus other countries to show you exactly what's happening in the housing market. My name is Jeb Smith. I'm a real estate broker here in Southern California. My goal with this video isn't to get you to buy a house. It's to give you the information necessary if you're planning on buying a house so that you can make informed decisions. So do me a favor, if you find any value in this content at all, hit the thumbs up, share it with a friend. Feel free to subscribe if you want to stay updated on everything real estate related. Now I want to start today's video by talking about what's actually happening in California real estate at the moment. Now, remember, real estate's local, so depending on where you're located in the country, things might be a little bit different than here in California. As you're going to see from some of the graphs that I'm going to post, the numbers here in California are crazy, especially compared to other states out there. So I can tell you the real estate here in Southern California is probably not what you're seeing across, most of the country, but it's good to know what's going on because California is actually the tail that wags the dog in many ways. So what's happening in California might translate to other markets across the United States because let's be honest, what's happening here in California is happening in a lot of states because of the people that are leaving California and the growth that's happened in California. So let's take a minute here and talk about what's happening currently. We're going to look at some data on affordability, what might be pushing home prices back here in the near future. And then we'll also look at the other side of the argument, the opportunity for home prices to continue to grow. Now, if you're looking at the headlines, as I mentioned earlier, you're seeing that the median home price is actually declining. And at the same time, you're seeing buyer demand declining. In fact, buyer demand is down 8%. But what is the reason buyer demand is down 8%? Well, it's likely due to a lack of inventory, a lack of available options for buyers to actually buy. Now, many people will say that it's affordability. Buyers are on the brink of affordability, and that's the reason that home prices are declining. But we're at the lowest levels of inventory that we've ever seen historically, especially coming in to this time of year. Currently in Orange County, where I'm located, last year we had 2,498 homes on the market at this period of time. Today, we have 1,408 homes on the market. So about 1,000 less homes on the market this year than last year. And last year, we were complaining that there was no inventory. So this year, our inventory is way depleted. Now, how does that compare to prior to COVID? Well, the 3 years prior to the pandemic, 2017 through 2019, the average number of homes on the market was around 4,900 homes during that time. So we're significantly less, about a fourth less than during that period of time. And that was a time when home prices were still gradually moving sideways to up. So it wasn't like we were in a downward market at that time. Home prices were still appreciating. So the reason you've seen this, this continued appreciation, acceleration in home prices is partly due to supply. The other catalyst has been interest rates. And there's a lot of people out there at the moment, because interest rates have gone up nearly 1% since the beginning of the year, worrying that home prices and interest rates are going to continue to rise. And therefore, they want to get in before, affordability really becomes a problem. And we're going to talk about affordability here in a minute here in the state of California and what that looks like. How much people are using, of their monthly income towards their housing payment and how that could be a catalyst to actually pull housing prices back. Before we get into that, though, I want to continue talking about the data here. Now, as I mentioned earlier, buyer demand is down 8% year over year. In fact, demand is at the lowest level we've seen since 2008. At the same time, 43% lower demand this year than last year. Now, what does that actually mean? How do they measure demand? They measure demand based on the number of homes going into escrow. So why would demand be down? Well, it's down because there's less options, less properties for buyers to choose from. There's less opportunities in the market. Buyers can't go into escrow on a home that's not for sale. And therefore, that's one of the reasons that you're seeing multiple people bid on properties and bid the price way up. If you've heard me talk in my other videos, I recently put a property into escrow here in Irvine that we listed at $850,000. Now, the buyers purchased this property for $735,000 in 2020. And so, we listed it for $850,000. It sold for $1.1 million. $250,000 more than the asking price. That's 30% more. That's almost a 50% gain. 49%, a 50% gain in just under 2 years on where they bought that property. So you're looking at this going, why? Why would people do that? Well, it's a fear. It's a fear of missing out. It's a fear on rising rates. It's all of this combined, right? You have millennials, which make up a huge percentage of the buying population. Now, while that has dwindled just a little bit, they still make up a large percentage of the buying population. Same time, you have move-up buyers, buyers selling that entry-level home, buying the next home. Then you have move-down buyers, their kids have gone off to college, they no longer need the big house, they're downsizing. You have investors, you have pension funds. In some areas, you have overseas buyers. And that's why the expected market time over the last 2 weeks went from 23 days to 20 days. That's the lowest level since they started tracking these numbers 19 years ago. So the market is moving very, very fast. And so if you're a buyer out there, you need to make sure you have your ducks in a row and know what you're dealing with if you're planning on making an offer. Now, earlier, I mentioned the property that I was selling in Irvine. One thing I didn't mention here is that, when they were buying the property, they waived the appraisal contingency. The appraisal on that property ended up coming in quite a bit less than what they offered, and they still decided to move forward. Now, they did waive the appraisal contingency. I'm sure they could have come up with other reasons to back out of the contract, but they moved forward. And there was a big gap to make up there. So if you're a buyer in this market, just know what you're competing against. In fact, the average list to price ratio is sitting at about 101.4%. So on average, homes are selling about 1.5% higher than where they're listed. Now, in the case that I gave you a moment ago, that's a rare case because of the zip code, because of other things that's driving that home price up. That's not normal. But just know, if you're planning on making an offer in this market, you're likely going to have to go above the asking price. And the last thing I want to talk about before we start talking about affordability is demand on the luxury side. So demand is actually down by 11%. Now we're talking homes over 2 million. So demand is down by 11% or 29 homes year over year. But at the same time, active inventory is down by nearly 50% or 360 homes. So if you're just reading the headline and it says demand is down, well, it is down, but it's down compared to a time when there would be a lot more available homes to choose from. Therefore, again, buyers can't buy homes that aren't available in many cases, and therefore the numbers, the demand is actually going to reflect a lower number. So just know what you're getting to if you're planning on buying in this market. Now, a moment ago, I talked about affordability. So I'm going to throw a graph here of the entire United States, and we're going to focus in on California. And you can see from this graph that California uses about 43% on average of their total income towards a housing payment. Now, why is this important? It's important because most lenders out there have a cap on their debt to income ratios when lending money. If you're doing a conventional loan, 43% is more or less the upper end of what lenders will lend to buyers to actually buy property. So as home prices continue to rise, the average buyer out there is going to be stretched on their income going towards monthly debt, which includes that housing payment. So, depending on the buyers out there, there might be a point of, no return, so to speak, where, buyers can't afford the home prices that are currently showing on the market, and therefore home prices have to settle a little bit and or correct, or wages have to increase during that period of time. So this number is a bit scary when you're looking at the big picture, right? California is way higher on the debt to income ratio, if you will, compared to other states. And that's another reason why you've seen people migrate out of state, right? A lot of people have migrated to Texas, to Idaho, to Tennessee, where it's been more affordable. And they've been able to take these gains that they've had in California to other states, and that's why they're able to offer more on homes, go above the asking price. It's because they've had this capital that they've gained in appreciation over the period of time. And so, while they're able to move out, people are still coming into the state and buying real estate. But the question is, what is the threshold for those buyers? There's a lot of cash buyers out there. In fact, on the 22 offers that I had on that listing that I mentioned earlier, there was a good portion of them that were cash. 3, 4, 5 offers were cash on that deal. So there's a lot of cash out there in the market. And even in those cases where a buyer was getting financing, they still came up with the difference. Out of the 22 offers that we had, only one was putting less than 5% down. The other 21 offers had at least 10% down. So there's a lot of buyers out there with a lot of money, and that's one of the reasons that you're continuing to see home prices increase. But the real question at hand is, do California home prices still have room to run? I've mentioned affordability becoming more of a concern when I see home buyers do things like I mentioned a moment ago, go 30% above the asking price to buy a house. And not just my listing, I'm hearing it across the board. That raises concern in my eyes, because everything I've learned in real estate in nearly 20 years seems to be going out the window. People are doing things I've never seen. And that's a bit concerning. But at the same time, if you've heard me talk before, I don't believe a crash is coming. I believe if anything, we should see somewhat of a correction during, the next couple of years. But after looking at the graphs I'm about to show, I'm not sure if that's actually going to happen. Now, as you can see here, look at the nominal house price gains in other countries compared to the United States, like Australia, Canada, France, the UK. You've often heard me talk about them in other videos, talking about the crazy appreciation that people are seeing in, cities like Toronto, where it makes, California real estate prices seem pretty affordable in the grand scheme of things. Look at these numbers compared to the US, right? Looks like the US has a lot of room to grow. Now, you're probably saying, well, what about inflation? Well, look at the inflation-based numbers here. You can still see we are well below these other countries out there with regards to appreciation over the last 20, 30 years, if you will. And the last graph I want to look at is housing prices versus disposable income over that same period of time. You can see here, the only time that house prices have gotten higher than disposable income in the United States was during that 2007, 2008 debacle. Since then, it's been lower than disposable income, although they've run pretty much side by side. It's stayed below that disposable income number. But look at other countries. Look what's happening there. Look how much higher home prices are than disposable income. So if you're comparing the United States to other countries out there, it looks like we have a long way to run. Now, I'm not saying that's going to happen. I just want to make sure you have all the data out there if you're planning on buying a house or making that decision. So if you're wondering, should you buy a house or should you wait? Let's take a minute here and talk about that. If you're planning on buying a house in this housing market, you need time. If you're saying that you're only planning to be there 2 to 3 years and then you're going to sell your home, you shouldn't buy a house in this market. You need to have 5, 7, 10 years. 10 years is probably ideal. If we compare it to the last housing crash, if you will, back in 2008, the low, if you will, was sometime around 2008, 2009. It took about 7, 8 years for home prices to get back to where they were. In fact, if you bought in 2006, which is pretty much the height of the housing market, it took about 10 years for your housing value to come back to what you paid for it. In some areas of the country, it still hasn't come back. So just know, if you have time on your side, you can, sustain any bumps in the market. And that's why it's important. If you can afford the monthly payment, you have money in the bank, you have job security, you have that longer term time horizon, there's big benefits to owning real estate. And that's a reason that homeowners have a 44 times greater net worth than those of renters, because they own real estate. Now, I'm not here telling you you have to buy a house. I'm just saying if it's the right time in your life and you're planning on buying real estate, those are the things that you have to consider. Now, throughout this video, you've heard me talk about Southern California real estate. I'd love to know what's happening in your area of California, depending on whether you're in Northern California or Central California. Do me a favor, leave it in the comments below. A lot of people read these comments. It can help a lot of people out, and it helps me understand what's happening throughout the entire state of California. Now, if you're watching this and saying this is absolutely the worst time ever to buy a house, do me a favor, watch this video. I shed some light on what's actually happening in California real estate in a little bit more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.